Welcome back. You're watching Budget 2013 Street View. Dharmesh, in terms of the budget impact, can you identify a clear set of winners and gainers for our viewers? And after today's correction, to your mind, where exactly value has surfaced up?
Well, I think so. A lot of stocks, I think banking has created a lot of value today with the kind of carnage which happened today on the bank Nifty, and a lot of these stocks have gone down substantially. So that definitely looks an interesting area to look at. And once we read more finer details, we'll understand where the spend is going to go from the government. And on that basis, obviously the infra looks the most attractive in that sense, and they've also corrected in a big way. So banking infra is where I will be looking at right now.
Punita, do you think the one disappointment also has been that there hasn't been any roadmap, or rather the arithmetic as to how he's reached the deficit numbers? There's the divestment target has been kept as is. I mean, why would an FII pay money for a 15 times valuation into equities when there is no growth visibility?
Yeah, you're right. As I said earlier, these measures are not transparent in the sense we don't know what the result will be on growth, and that only time will tell. But coming to divestment, I just wanted to mention one point. Today's market fall, if you look at it, is the size of the entire divestment target. So even to meet this divestment target, I think the capital markets need to be more buoyant. Otherwise, you're not going to be able to divest 40,000 crores. You've already lost that in one day in terms of market cap. So I think maybe they have to come back and revisit the budget that they've announced today in terms of some of the finer points, because otherwise the markets are not really going to react, and that's not going to help them achieve their fiscal deficit targets.
Jahangir, do you still feel that this year's budget is more like a paper tiger and FY14 assumptions are slightly stretched?
Yeah, I mean, if you look at the revenue targets, I mean, they look pretty much bloated. You're putting on a 19% growth rate when, again, there are smattering of tax measures which might get you there. But the good news in all of this, and the good news from a very ironic point of view, is that so is expenditure numbers. If really India can actually implement a 30% increase in planned expenditure, then this is probably the first time it has done so in probably the last 50 years. So my sense is that this year's budget will go more or less the same way at last year's went, where revenue numbers will be less than what was budgeted, but so will expenditure. And so the 4.8% budget target will likely be met again by cutting down on expenditure. And my guess is that given that the elections are in May, most likely the budget execution will be much slower in the first 2 quarters of this fiscal year and pick up after the monsoon, after the the agricultural season gets over and closer to the budget, closer to the elections. And that's the way in which the 4.8% target will be met.
Dharmesh, what happens to the mid-cap end of the market? I mean, while sure the downtrend has been visible for the past couple of trading sessions, but do you think there is more exaggerated sell-off that's still in store?
Well, yes, the mid-cap, if you look at the stock prices, it looks like a 12,000 index. So they've been smashed out of shape. And generally people buy mid-caps when you're bullish on the overall India or when you get good global cues. So we are not expecting a huge rally in that kind of a scenario globally also and with this budget. So obviously mid-cap is not where people want to be there currently. And as there is no breadth in the market, you're not able to get out of those stocks. So that's why they get a very huge impact when people try to go and sell, especially when there are a few margin calls here and there, and that creates more panic in the market. And if you look at the way the large cap has been smashed today, obviously people will first enter your large cap stocks rather than going to mid cap.
Probably things like tax the super rich, minor tinkering in custom duty, minor tinkering in the surcharge. What do you think the finance minister will be able to achieve because of this?
I think what he's said in terms of what the surcharges are going to do is to produce some 14,000 crores of additional revenues, and not even all of that is going to necessarily come from surcharges, from what at least was being discussed on television. So it's really, in my mind, it's a tokenism, it's a gesture, it's a political gesture that there is pain in the economy. The pain is being felt by the by people in by large parts of the population, and so there should not be this privileged 45,000 people who get away, and they must contribute their bit, and so they must pay a surcharge. Now I don't know that it does anything to the budget math overall, but it's it's a statement to make, and now who's going to I mean you just you have no choice but to accept it.
Madhu, the big concern for Indian economy is that the private investment or the private capex cycle has broken down. Do you think the finance minister has done enough to boost the investment cycle?
I think that there could have been a few things in the budget. I think this is where I would have expected him to do a little bit more to disincentivize in saving in gold and saving in real estate, and more incentives, really something really out of the box for stock market, for bond markets, for bank deposits. I think he has attempted to do a few things in these areas, but I think that is clearly short of expectation, and that is again given his own understanding of capital markets. That is where I would have personally expected him to do a bit more than what is being delivered.
Punita, come tomorrow onwards, do you think a large part of the market would focus on the energy space like we were just discussing during the break? Because the finance minister did talk about the NELP auctions, he did talk about gas pricing policy as well as shale gas.
I don't think just energy is just a play just for tomorrow. I think this could be the year where energy as a sector could actually do quite well in the stock market because of number of reasons, just the subsidy reductions, pricing policy, hopefully price revisions upward for some of the company's products, including, we've seen diesel, possibly gas, as you've mentioned. World over, we are seeing, energy stocks being in favor this year. Indian energy stocks have been a huge laggard. So on a pure valuations, they look attractive as well. There is also divestment likely in some of the energy stocks. We've already seen Oil India, and that also creates, their road shows. The companies are willing to meet investors. So for all of those reasons, I think energy as a sector looks fairly good versus the rest of the market.
Jahangir, based on the fiscal deficit number, do you think directly, indirectly, Reserve Bank of India now will be under tremendous pressure to consider a rate cut? So far they've been maintaining that, government, they need to get their fisc in place before they could consider anything. Now, at least the fisc commitment is in place.
I think, the RBI more or less boxed itself in the January policy meeting when it essentially said that, look, the two things that we are really worried about, inflation and fiscal deficit, if the government delivers on that, we will probably continue with further cuts. So my sense is that in the March 19th policy meeting, the RBI will find it very difficult not to deliver another 25 basis points of rate cut. The government has delivered a very credible FY13 fiscal deficit outturn of 5.2. It's following up with a promise of 4.8% for FY14. You can quibble with the numbers. You can say, well, let's see how it turns out. But at this point in time, there's very little that the RBI can do to say that, look, we don't really believe in the 4.8% number. So having taken the 4.8% number, given the fact that the inflation is likely to be below RBI's own forecast, my sense is that on March 19th, they will have to deliver another 25 basis points rate cut.
Bobby, from a market perspective, what does the royalty tax increase mean for names like Maruti, Unilever, Bosch, ABB, Siemens?
So actually, the existing rate of tax on royalties is 10%, which has now been hiked to, or proposed to be hiked to 25%. It probably will not have an impact on many of the companies or most of the, or all of the companies that you've named, because most of them will be companies coming from jurisdictions which have tax treaties with India, and most tax treaties with India tend to have lower rates of tax prescribed for royalties than 25%. So It's, most treaties, I think the rate tends to be somewhere in the region of 15%. And so that's probably the rate that would apply to most of these companies. Now, the issue is whether, for different companies, where the royalty payments are actually going, if they happen to be going to entities or special purpose vehicles which are located in jurisdictions where there are tax treaties, which don't have tax treaties with India, then the 25% rate might kick in. But I would reckon that most companies, chances are that they will not get affected as much. The rates will move from 10 to 15. So there is a 50% increase in that sense, but it's not going to be 25.
Bobby, we'll leave it there. Really appreciate your time and thank you for your insights. Punita, thank you for your time. It's been a marathon day for you, so really appreciate that. Madhu and Jahangir, gentlemen, thank you for your time.